Welcome to TradeTheMBI.com. This is John. This report is for the 9th of May, and well, we're still stuck between this range here for the ES, the S&P 500. We had the little Iran announcement. It didn't even phase the market because, well, frankly, it's not really impacting anything. Still earnings, but you can see that we're starting the first beginnings here as we open with a slightly lower shakeout. Now, that doesn't mean the day is going to close this way, so it's a little premature, but that's that rising orange that we talked about at the same time falling steel. It's usually that first dip down that becomes the next buy wave up. Now, that's going to depend on whether or not the cyan and stays below zero. If that pops up as well, then you're going to have more shorts active. They're below zero here, meaning they're not as active, so that's not causing any real problems. But remember, we have this dip below the red line right here, which in sell configurations is going to attract that back down towards the lows. The 25.90 range, of course, you know, like I said, we've got the zones right here. The 38%. It's at 49.50, so, but you got upside resistance at the 50%, which is at 79, so it's about 10 points higher than we are right now. So those become the key areas, and just recognizing where this is at. It's still bullish in the sense that you have rising red, rising green, and cyan below zero. That's all helpful. You're just under pressure right now because short-term buyers have faded it because the wad got blown here. The funds popped in. We'll see if they used all of their money or if we've got a little bit left over. You can see much better NASDAQ here with that nice shakeout readings over the 50%. It's on the top side of the short stop, which is this little red line that's developed right in between here. So that's creating a little bit of resistance up above. And then, of course, it has the 61% right above where it is, and that's at the 68, 67. So pretty consistent with what they're doing, just the NASDAQ's in a better zone range in that. And the pressure of the euro collapse here, not a surprise, because remember, we talked about this. We had the positive extremes, so we've been looking at all these different setups. First, we had these right here, this major dips. So that one got filled the other day. These have been taking us. Then we're going to move all the way back over to here. Is our next level that was touched, and that happened well just a little bit ago. And before that, you have the dip below the red line back here, and then we have to climb back. But no, think about this: we're retracing positive extremes from the beginning of the year, so that just shows you that eventually these babies get filled in, and that's beautiful. But look at this distribution; that's just gorgeous from a short standpoint. Intraday, it's even been more fantastic from a decline. And you can see this is that power of no closes above the 23%. There's nothing to do with this than to just continue to ride it. And this has been, you know, well, short from well back over here, but that's represented a good 4 points plus. Nice. That's a lot of pips. TLT. Again, so on the ABM zones, but we expect further weakness. Come back all the way to the lows here. It hasn't done it yet, but that's going to vary. Oil, some of this move was directly probably Iran related, but the sanctions returned back to there is going to reduce supply. Whether that will have a European impact or not, probably not, because all the other partners in that deal are more than happy to trade with them for cheaper oil and gold. A little bit of bounce back. It's been struggling, but you can see dip below the red line again, so just can't seem to catch a foothold in the current situation. 5K was really erratic day. Let me shrink this just a little bit more so we can go back to the beginning of it. Some people were asking about the Big D. It's an interesting little setup. What it's looking for is the initial orange above steel cross and then it looks for, well, in this particular case, you had to have cyan over red and green dipping, and it takes that, and then literally what it looks for is the closing of that snake mouth. If you go back over to here like this, where you have the bullish one opening up, and in this particular case, once you cross out of it with the tongue, which didn't happen until, well, shoot, all the way over here where the steel finally closes out of it. But this was a nice little buy setup here from the dip there, and then that first down bar usually is the strongest for a pull, and that actually lifted it up above the 50%, and it just took off from there. And it's a little hard on this one because we have the whole day of the rising gold for the most part. That's why the paint is colored that way. But what you'll see now on this chart is we go from modest green to stronger green in the darker colors, and I'm working on some of the downside conditions before it turns red, and then when it's below that 23%, it gets into deep red, just from a visual standpoint. So select the intensity. It starts off light and then grows as it gets more intense, but in this particular case the gold came in, and when I remove the gold portion, it'll just be the proper color. It'll either be a green or a dark green depending on the intensity of the move. So all in all, good stuff. A couple other setups going, a few little adjustments. It's an interesting one because on positive shakeout, particularly just getting over the 50%, not always the greatest idea to short that setup right there. Usually you want the close coming below that one. It's happened a couple of times with it, but this is an interesting program. It's got a little bit of a problem in like this situation where it shorted beautifully right here at the 67.75 and then covered at the 65. The problem was it bought again right there and closed it, so it's skewing the results where it's like buying and selling at the exact same price, which is like a zero, but it charges the commission in that, so it's doing that a couple of things. So there's a little error in that it makes that strange double cover for no good reason. So work that one out, and that should improve things, and then I can lay out the parameters for you, and you'll be able to see what it looks like from a bigger picture. Anyway, those are some of the little things that, and then the reason I do these is it helps establish what are the best transition points, at least from an intraday and you can certainly see that there are other ways to treat this, even a close above the 23, but that would have still been right in the same spot. And we got a lot of that where we were just caught between zones. It wasn't until we broke out towards the end of the day here that things actually got pretty consistent. It was still fairly okay with the shorts. We didn't have really that many dips below the red line. We had it right here on the extreme, and sure enough pops up, and usually that's where the 50%, and then it came back and retested it, and we did the same thing. Now we have this one right here, which is important to note, all the way down at the 54. So that one is going to draw some attention here on any reset, which we haven't seen yet. So you have to wait for the signal to arrive. That's the long and the short of it at this particular point. We're just going to have to go with what is midweek. Not really expecting a whole lot from the action today unless the major breaks, but that would be a surprise, and that's not what the market's indicating it's expecting. As always, I'll keep putting up charts on the Skype chat. Trade well.